it's always easier to be structured as a fund because you have the money available to
Sure.
invest, right? So
Yeah.
we need to raise the money on a deal by deal basis.
Mm-hmm.
So that creates, more complexity to the equation. But now we have a robust network of investors that are always eager to see what new deals we have. So that has helped us increase the check size throughout time.
You're listening to the Accredited Investors Only podcast presented by Accredited Life.
All right, Eduardo, welcome to the show. How you feeling today?
Thank you, Peter. I'm excited to be here.
I'm excited for you to be here. So let's just start with an introduction. So Eduardo, who are you? What are you doing? Why are you here? All that kind of stuff.
Sure. So I'm born and raised Mexican, but I have been living in Miami for the last 13 years now. My whole career since I graduated from college has been in private equity real estate, um, with institutional investors both in Mexico and in the US. And I founded Manglar Capital back in 2016.
Mm.
So it has been almost 9 years now. And we have developed into a completely different thing than the one we started with.
Mm.
So it has been an interesting journey. We specialize, I would say, our bread and butter is multifamily,
Yeah.
or I would say residential real estate. But we have done a little bit of industrial, retail, uh, a mixed use type of projects.
Gotcha. Awesome. Well, God, there's a lot to talk about there. What originally brought you into the space? I always feel like not everybody, gets started. It's kind of right away, right? There's always a journey
Yeah.
to getting there, and I'm probably like you, where it's like I got out of school and that's what I did. It's always been my life. I wasn't like some other engineer or doctor or something like that beforehand. So, what was it that kind of brought you to the space?
I mean, since I was in college, probably I was leaning towards private equity.
Okay.
That's what I wanted.
Hmm.
And I got an offer from Prudential Real Estate Investors. Now it's PGIM. The real estate investment arm of Prudential Financial.
Yeah.
They have an office in Mexico. And back then they were managing around $3.2 billion for Latin America.
Mm.
So I was hired for the Mexico City office, and specifically working for a residential fund. Actually, that fund had the mandate to develop the first multifamily or apartments for rent platform in Mexico.
Okay.
Uh,
Wow.
so I didn't intend to get into real estate, but I wanted to be at a private equity.
Mm.
So they made me an offer right out of school. I liked it, and I started enjoying real estate, and probably because my grandpa always told me, invest in bricks, invest in real estate, invest in land. So when I started looking at what it was, I fell in love, and I became pretty passionate about real estate.
Gotcha. That's so you caught the bug, and it's kind of stuck with you ever since.
Yeah.
When'd you make the leap to your own fund? I mean, what was the catalyst for that, and what was kind of some of the things going through your head, and then you said what it started as to what it is today has sounded like there's been a pretty big evolution. So let's
Yeah.
talk about that.
So I mean, it all started with Prudential. It was a great school because right out of
Mm.
college, I got the opportunity to travel all across the US, learning from, different sponsors and operators here to understand the business, and then try to replicate that in Mexico. And then I got an offer from a Miami fund to join the team, much smaller team, much smaller. Like we were 6 people at the
Oh wow.
fund. Even though we were a private equity shop, we were structured, or our investments were more on the structured finance type of thing. So I started as an analyst, and 4 years later, I was the managing director for all the real estate practice of the fund.
Wow.
So I grew really fast, and at some point, I decided, I have this itch of starting my own thing, and probably it's because I always had some sort of issue with authority, right? Like at some point, I told my boss, "Listen, I'm gonna do my own thing." So I exited the fund, and at the first, I would say, like the first version of Manglar started as a advisory,
Mm,
for real estate sponsors and developers, both in Mexico and the US. Um, so I got the opportunity to meet a bunch of people, learning about their business and helping them, secure primarily equity, although I was also helping them with that. Because by coming from the institutional world, I had good relationships in that space.
okay.
And I saw that a bunch of guys, were not doing the right thing when they were making the jump from raising money from friends and family, or their close network, to going more institutional. So me being on the other side of the table, I was able to help them. This is how you need to present it,
Mm,
because these are the type of questions they're going to ask you. So that was the first version of Manglar, and I continue doing that in parallel, I would say, all until 2020, right before COVID.
mhm.
But in 2017, we started investing our own money, and a little bit of friends and family money in our own projects. So Manglar had like two different hats, one on the advisory side and one on the investment, or sponsor side. And we were doing ground up construction and acquisitions in the Austin, San Antonio area. That's what
Okay.
we were 100% focused on. And as you probably know, Austin exploded during
Sure.
COVID. We were not the first to get into Austin, but we were at a good time that we were able to ride the wave.
Mm,
Um, then COVID exploded. We started receiving ridiculous offers for stuff that we had there, even land,
mhm.
that I told my partner this is the right time to sell, basically.
Sure.
We exited everything, and then we bought two pieces of land on our own, in Northwest Arkansas, in Bentonville specifically.
Mm,
Yeah, because it all came down to an article, a Bloomberg article, that said everybody has been looking for the next Austin, and they
sure.
were talking about Tampa, Denver, Nashville, and the article was saying, "Hey, why don't you consider Northwest Arkansas, like for real?"
Mm,
And it got me started, and I fell in love with the area. But those were the last two deals that we did on our own, given that the market was really hard to find good deals. Because prices were like incredible high. We were not able to find good opportunities for the right returns for our investors. So what we decided to do is, let's completely change our structure, and we were able to become like a family office, primarily, or initially was like with for Mexican investors, but
okay.
now we have investors all around Latin America, and bridge that gap between institutional level deals in the
Mhm.
US with retail, or yeah, retail and family office money in Latin America.
Mm,
And the reason why we did it is because, while I was doing all the advisory with Manglar in the first version of Manglar, I saw that a bunch of guys, from Mexico were coming to the US, raising money, and they were taking advantage of the lack of knowledge of Mexican or Latin American investors on how things work here.
okay.
They were charging pretty high fees. Um, or they were not creating entities for each of the projects, so they were sending the money to the sponsors entity rather than the project. Then the project never started. A lot of people lost money. So I decided, let's become like the advisor of people that want to invest in the US
Mm,
in real estate.
mhm.
And that's what we have been doing for the last 4 years or so. And with an approach that we're not a fund. Uh, so all the investors have like full discretion on where the money is. So we
Okay.
present the deals that we're working on at any specific time, and they can decide in which ones they can invest. And we provide the risk and the returns, etc., and what are the mitigants for the risks. and that has been a pretty good success with our investors, because now it's not a black box that I will invest the money wherever I want,
Mm,
as a fund.
yeah.
And and also I have the flexibility to adapt into the market faster, rather than having a fund, right?
Mm,
So whenever I
yeah,
see
that's
a
a good point.
change in the market, I can change. And also, if you have a fund, and for some reason you're not finding good deals, like what happened during COVID, the worst thing that you can do is return the money to your investors, right?
Mm,
So and that happened to us at my previous employers. Like, we had the need to invest, even though the deals were not the best. We needed to invest that money.
sure.
So you were forced to make not the best decisions, you
Mm,
know.
yeah.
So that sticked in my mind. So I wanted to have the flexibility to navigate through different cycles and to adapt really fast to what I was seeing in the market. So now, instead of being concentrated in any specific market like it was before in Texas, now we invest anywhere in the country. Of course, we avoid certain areas,
Mm,
but now we have deals in. I mean, we're investing more in Northwest Arkansas. We have deals in Kansas. We
mm.
we still have deals in Texas. We have deals in Florida, Georgia. So now we have a broader spectrum of potential opportunities, and we partner up with local sponsors that are experts in that space, in that market, that have deeper rooted relationships in those locations.
Gotcha. Wow. There's so much to unpack there.
Yeah.
I don't even know where to begin. I have so many questions for you. I love what you're doing. It sounds amazing, and I love how you've kind of compounded everything you've learned over the years that brought you to where you are today, and you laid an amazing foundation working at some great places, and having those experiences, you kind of shape and craft what you're doing. So that's amazing.
No, thank you.
Let's talk about the institutional kind of quality assets and all. Like what separates that? You said in the advisory firm, a lot of people were struggling from going, raising money from mom and pop, the friends and family, retail type investors, that kind of thing, to the institutional, and probably more legitimate, family offices and things like that. What would you say are some of those key characteristics that would interest an institutional investor? What are some of those things that you have to do uh, differently in order to attract that, and some of the mistakes you see people make, when it comes to making that transition and all. And let's start there.
Yeah, I would say, a lot comes down to the underwriting itself.
Mm,
Like, uh, being on the other side as an institutional investor, you always question everything that is sent to you, right? You don't take anything for
sure.
granted. So, and I love to model back in the day, and I still do. So I get into the nitty gritty of the Excel pro forma. I need to understand if the model is actually working properly, and what are the main variables, and understanding what is their value proposition, in terms of, we can become more efficient on the expenses, and this is how we're going to increase rents. So all those questions that I would say not a lot of retail investors will ask the
Mm,
sponsor, right? To really understand, hey, what do you think this is going to happen, right? And based on what you think that you can achieve those rents, etc. Because a lot of guys, they just say, yeah, the comps are renting the places $300 above what we are. Yeah, but they have this and that, you
sure.
know.
Yeah.
Uh, and I think retail investors, they usually just see the deck. They don't get into the numbers, right?
Yeah.
And that's something that we really really get into. Like, of course, we review the deck, etc., but we get involved in everything. We need to understand the numbers. uh, and the way we treat each investment is like, we bring our lawyers so they can review everything as if we were selling this to an institutional investor.
Yeah.
Our subscription package is the same as we will have a private equity shop involved in the deal. Reporting, asset management, everything that because we're representing all these guys, and we want them to see us as their family office, as not just
Mm,
a guy that is bringing them their money. It's a guy that is co-investing with them in all the deals.
yeah.
Uh, so it's more like, hey, this is a guy that I hired, but they didn't hire us
Hmm.
uh, to bring me opportunities in the US. And I want to leverage their expertise in the space in order for us to get a better understanding of what the deal is. And these guys, will review everything, and probably they will give me in layman terms, everything that they are seeing and
Hmm.
why should we invest in that deal or not.
Gotcha. So what do you look for in a market? I like how you're kind of market agnostic to some degree, but I'm sure there's certain criteria that you want to see. Like you said, Northwest Arkansas. Um, let's use that as an example. What was happening? What were some of the dynamics in that market that led you there, that excited you, that made you buy land there and all? What did that look like?
It reminded me Austin probably 10, 15 years ago.
Mm,
Of course, Texas is completely different than Arkansas, but Northwest Arkansas, they have a good university there, University of Arkansas in Fayetteville.
hmm.
They have the headquarters of three Fortune 500 companies, and one of them is probably one of the largest companies in the world, which is Walmart.
Mm,
So you have
yep.
Walmart, you have Tyson Foods, and you have JB Hunt, which is a logistics company.
Hmm.
Uh, when COVID started, a lot of people were looking for places to live, that it was more of an outdoors type of scenery.
Sure.
And at the peak of Austin migration, there were like 90 people moving per day to Austin.
Wow.
Right now in Northwest Arkansas, it's between 35 and 40.
Wow.
So keeping proportions, of course,
Yeah.
that one is Texas, one is Arkansas,
Yeah,
right?
that's good. Yeah.
So you have a pretty young population there. You have these huge employers. And something very interesting that Walmart did is like all their providers, it's really hard to travel to Northwest Arkansas in terms of, connections, especially if you're not in a big hub. So
Hmm.
what Walmart did is, if you want to be one of my preferred providers, I need to be able to get a face-to-face meeting with you within 4 or 5 hours.
Mm,
So that forced all the big companies, Coca-Cola, Pepsi, you name it, Unilever, all those big companies, Procter and Gamble, to start opening offices there.
wow.
So it was not only Walmart now, it was all these big companies started with a small office there, but then those offices continued to grow because it's Walmart, right?
Hmm.
So that attracted a bunch of things. Um, Walmart or the Waltons invest heavily in the area. A bunch of them, they still live there.
Hmm.
They're completely vested in making the town, more attractive to people moving in, to families, and it's a very family-oriented area.
Hmm.
They now Northwest Arkansas is the mountain bike capital of the world. So one of the Walton's grandsons, they developed 500 miles of mountain bike trails throughout the area. So
Amazing.
it's now a destination for
Yeah.
that. They have an amazing museum, art museum. They're investing in hospitals. They're investing in hotels. So the whole area, it has a tremendous growth, and they became victims of their own success. They attracted too much people, and they
Mm.
don't have enough housing now. So now there's a need of housing, and they're trying to see how they can come up with that deficit. But there's also like a council between these private companies, mainly those three families, and cities, and they both work on planning how the city will grow. So you
Hmm.
will see a school before houses are being built there, you know, and that doesn't happen here in Miami, for example, that I live
Mm,
in. Miami, it's now we don't have spaces for new schools, basically,
mm.
So all those factors, show us the fundamentals that we will we were seeing in Austin, and now we were seeing in there. And hopefully within the next 2, 3 months, we're closing another deal there. This is an existing opportunity, a multifamily. Well, it's a BTR actually.
Mm,
So there's a lot of growth. Of course, pricing has increased like everywhere in the in the US, but here it's just a matter of a bunch of people moving there. Walmart is building a $4 billion new headquarters. They're closing all the satellite office in New York or in the West Coast and bringing all those jobs, like 10, 15,000 jobs, back to the US.
wow.
Back to Bentonville, where
Yeah.
everything started. Like the first shop that Sam Walton opened is in the Bentonville Square, literally.
Okay.
Um, so these guys are building a huge office, similar to an Apple campus,
Yeah.
you may say.
Wow. That's amazing. Well, shifting gears to like the deals itself, what are you looking for there? You know what I mean? You just mentioned BTR, built to rent, multifamily. You said you're residential focused, and it sounds like especially when it comes with scale. So what do those deals look like? And also, I'm looking at your website. I mean, it looks like you've done a lot of land development plays and stuff like that. So I'm curious, what kind of where do you want to enter in? Do you want to enter in from the ground and go from there? Do you want to existing value add? Does it not matter? What do you look for in a good deal? Is there any set criteria, or
Yeah,
I'm curious to your mindset around the deals.
it varies. I would say we're very selective on the development deals that we get involved with. Um, we're not seeing a big alpha in terms of the returns that we can get on existing versus development.
Hmm.
So and of course removing the execution risk and lease of risk of
Sure.
development, we're seeing better traction primarily on acquisitions.
Mm,
Um, so what we're doing is, if we find a good development deal, we can get involved in it. Like for example, we're doing land development in Wichita, in Kansas, but there's, a component that it's making it much more attractive. Like the city is providing all the
mm,
infrastructure money to us.
okay.
Uh, so basically, what we're just doing is land flipping or improve lots or finish lots to developers,
Hmm.
and the returns are attractive enough that we don't need to get to develop the actual house,
Yeah.
um, which we could potentially do, but right now we don't see, being a benefit at that point.
Hmm.
On the acquisitions, we're trying to find deals that have a good story behind it. Like either it's a pretty good basis acquisition, or there's some sort of story behind the seller being stressed or distressed at some point. We have done some investments in Texas where we can have some sort of tax abatement through the HFC structure. So that releases pressure from the cash flow, um, while achieving, I would say, value add returns without having to renovate anything. You know,
Hmm.
those are the type of deals that we're looking after. I would say in the deal that we're potentially closing in Northwest Arkansas, it's a brand new BTR community that the developer is selling at a pretty good basis. Um, that even a GC, the family office of a GC that we're partnering up with, is getting involved because they know how much it costs to build a new one, and
Hmm.
the basis for this one makes sense for them to invest their own money on an existing deal.
Mm,
Um, so that one, it's more of a basis play, burning off the concessions,
mm,
and just riding the wave of everything that is happening. And this project is in Fayetteville, so
okay.
it's but yeah, we're very opportunistic. We say no to a bunch of things, but whenever we like something and we like the sponsor and we like the strategy, and the projections are conservative enough that we think that we can achieve those returns, we start digging into and we decide to invest.
Yeah. So talk to me about the sponsors you're investing with and how those deals are structured, and then yeah, how do you go about finding them? I'm sure it's a lot different than you would if you were investing directly and looking for land or an opportunity that you guys are going to buy directly versus investing through with a sponsor or local operator that has that inside local knowledge, that kind of thing. How do you find those people? How do you due diligence them? Talk to me about that.
Yeah, so a lot of them are relationships that I have from my previous experience.
Nice.
We also receive new deals through equity brokers
Mm,
as well. Um, and you know, I think we have a mix of sponsors. One are like the up and coming type of guys that have experience working from other shops or etc. And now they started their own thing, and we believe in the team rather than the track record within the new company, right?
hmm
Um, so I'm probably pretty old school. Like I need to see them face to face. I travel the area until I feel comfortable. Then we can decide to spend some time on deals specifically. But I always try to spend some time on getting to know the team. We have some others that are very well established. They have a huge track record. In some cases, second generation type of owners that are
hmm
taking over. Um, so we look at the team, we look at the track record, the good and the bad stories, of course. We participate as co-GP in most
Okay.
cases, uh, or a traditional LP. And the reason behind being a co-GP is it goes back to what I was saying as we were structured as a family office. We want to provide the best returns to our investors. So
hmm
in order to avoid having a second layer of fees,
hmm
we get to our partners and say, hey, listen, we can provide most of the equity for this deal,
Okay.
but let's share the fees. And
Mm,
and that way I can have my investors getting pretty attractive returns, and it's just a snowball effect, right? They will be
sure.
happy, they will continue to invest with us on the strategy that we're starting with you. Because as you probably know, the first deal is the hardest,
Sure.
and whenever you're starting a relationship, you want to be a programmatic relationship, right?
Yeah.
Like not
Yeah.
just doing a one deal. Um, so that's what we have primarily done. Of course, we can be an LP as well, and we don't have to be the majority, but we prefer to.
Sure.
Uh, but that we're pretty flexible on how to participate in a deal. Like we can
Okay.
be part of the GP, we can be an LP, we can be a minority LP. Uh, so we're pretty flexible in that sense, as long as the main LP it's someone that we believe it's adding value to the equation.
hmm
So yeah.
Is there a typical check size that you want to write or that you have to write? Or I know you were saying you don't really in this structure. I love what you were saying about like it not being a fund because it provides flexibility. I feel like a lot of times people try to justify a fund for flexibility reasons. They
Yeah.
think like, oh, like the money's just going to flow in, and they're going to be able to do whatever they want with it. Whereas in this case, it's like you're giving the investors a lot of control to choose what they want to invest in. And they have that discretion, that kind of thing. So I'm curious to how that if there's a certain check size or I mean certain because with the check comes like you said just some control. You know what I mean? The
Yeah.
money has a say, right?
Yeah. I mean, our check size, the smallest deal that we have done is 1.5 million,
Okay.
and we have gone all the way to 7, 8. Now we're increasing it to 10, 12.
Okay.
Uh, and of course, I would say it's always easier to be structured as a fund because you have the money available to
Sure.
invest, right? So we
Yeah.
need to raise the money on a deal by deal basis.
Mm-hmm.
So that creates, more complexity to the equation. But now we have a robust network of investors that are always eager to see what new deals we have. So that has helped us increase the check size throughout time. But Yeah, we feel comfortable in that space. The Up to 10, $12 million, anything above that. What we're targeting now, it's more structured or sophisticated family offices
Mm-hmm.
that they prefer to be the single investor in a
Yeah.
deal,
Yeah.
and they can write a larger check.
Yeah.
So now we're starting those conversations of guys asking us, hey, I want this type of deals in this location, and I don't mind partnering up with a local sponsor as long as we keep the major decisions, you know,
Okay.
and of course we can structure that for them, and those check sizes are of course bigger, and it's easier for us as well because we don't need to raise the money with
Sure.
different investors.
Sure. Well, it kind of transitions perfectly into what I was going to ask you next was, how do the relationships work with the family office, and how are you finding, these investors throughout Latin America and all, and, I'm assuming it's not as simple as, you were born in Mexico, so people trust you right away, right? And they want
Yeah,
to invest with you. I'm sure there's still all the fundamentals of building a relationship, having the track record, all of that still factors in. But I'm curious, like, there's certain groups that you go to, certain networking kind of things, certain clubs or something like that, or, how do you forge those relationships? And what does that part of the business look like?
yeah. So my business partner, he lives in Mexico,
Okay.
so
Okay.
he's
That's gotta help.
primarily focused on the investor relation side.
Okay.
We started with friends and family, and we started to increase our reach by word of mouth, talking to guys that can open the doors to different circle of people that we won't be able to attack.
Mm-hmm.
Um, and I'm bringing guys that can add value to that end, to the fundraising. Like we have developed strategic partnerships with people that can open the door to different family offices or investor groups. Uh, I'm bringing them to the table. Like for us, it's just a matter of continue to add value to what we're doing. We don't
Mm-hmm.
want to be, hey, this is just for us, and no, we don't share with anyone. If you're someone that can bring value to what we're doing,
Mm-hmm.
we're happy to open the books and say this is where you can make money with us, and of course it's a long-term type of proposition.
Sure.
Um, but yeah, it's just knocking on doors, people referring their friends, family, or other investors to us. Um, we haven't done a bunch of like meetings or
Mm.
conferences in that regard. Because what happens in Mexico and in Latin American countries, these investors don't go to those events. There's not
Sure.
like I want to invest in real estate. It's they're more private. They're more
Yeah.
like it's all about trust. And in Mexico, the investor needs to see you face to face, go out to dinner,
Mm-hmm.
see how you react to a few tequilas. Um, so it's more of a romantic process rather
Mm.
than in the States, especially with institutional investors. You might have money from people that you never seen,
Mm-hmm.
face to face, right?
Yeah. Yeah.
They send someone to look at the site, and just the lawyers handle
Yeah.
all the paperwork. It's more of a cold process. I'm not saying one is better than the other. It's just adapting to where the investor is and how you need to approach it.
Yeah, that's a really good point. Kind of like different cultural views and just how business is done. And will they ever go to properties as well, or is that something that they kind of
Some some of them,
imagine?
hey, I'm in Houston. Can I swing by the property?
Okay.
Of course, and we make it happen.
Hmm.
But a lot of them, they trust on what we're doing, especially
Yeah.
because we're opening everything to them. This is the deal. This is what's happening. This is the sponsor. Uh, but there are a few investors that they want to travel to the site.
Yeah, I could imagine. Wow. So you kind of have to put that package together and then deliver that to them. Is that also like a personal, one-on-one, or do you hold if you got a deal, do you hold a webinar or something like that? I'm curious to what that process looks like.
No, so I would love to do webinars, but this is very
Very
personalized.
personal, yeah, I
Like,
would think.
yeah, it's one-on-one. It takes time, several meetings. Basically, what my partner and I always say, we're planting seeds,
Mhm.
and
Yeah.
uh, the investor that we spoke with 6 months ago now is, hey, I have liquidity now. Where can I invest?
Hmm.
And it's very personalized. Like we need to be very to understand how to approach everyone. Because if we do like a massive webinar, it's it removes the family office
Sure.
component that we're
Hmm.
selling. You
Yeah.
know, it's because if we're your family office, we need to understand what are your needs, because we also help them, structure everything from a legal and tax standpoint.
Okay.
So to become for the investment to be tax efficient, for example,
Okay.
a lot of people are afraid of the IRS when we
Mm.
tell them it's even friendlier than the Mexican IRS.
Okay.
But you need to take into consideration the inheritance tax that you have in the US. All those, you know, nuances we take care of that. We have like a third partner that handles all the legal and tax structures as well. So
Gotcha.
we help them, because one of the questions is like, I like it. What about taxes? How
Hmm.
how can I invest? And we have the flexibility for them to invest from Mexico, or helping them create an LLC or a
Mm.
corporation here in the US, even a trust, etc. We handle all that part for our investors. Because
Yeah, I would think that's a very important aspect of it, and an opportunity for like an educational kind of thing too. Because I can imagine if they're not investing in the states now, or they're investing in the states in other manners and things like that, there's going to be a hurdle there, to understanding that, and that could stop them from maybe making a great decision. But it's just not having that knowledge or how it works. So I could see
exactly.
the importance of you guys doing that.
No, and for example, we have a lot of investors that have their money at Morgan Stanley, JP Morgan, whatever.
Hmm.
It's just stocks. And we always tell them, you need depreciable assets,
Sure.
in order, because you're paying taxes here, and we help them understand, now you have your LLC, take advantage of what that will bring you, right? So if it's an LLC that it's providing investments in the US, then your trips to Houston to take a look
Mm.
at our property, you
Yeah.
can deduct that. You can start taking advantage of depreciation, etc. That will offset whatever income you're receiving, not only from the real estate part, but from your stock portfolio.
Hmm.
And because of Mexico and the US have this the tax treaty, it's not like double
Mm.
taxation,
Hmm.
so whatever you pay here is taken into account in Mexico.
Wow. Okay. What's the long-term approach look like? Do a lot of these investors, are they looking, do they want their money back quick? Are they looking more for the long haul, or what's that look like? And do you work with different people with different means in that sense, or do you tend to
Yeah,
have a certain, you know, criteria
I,
that you're looking for?
I would say that primarily of our investors, they want to keep their money in the US. That's why they're creating all these
Yeah.
structures, especially because of what's happening in Mexico. People want to start sending money out.
Okay.
So a good way to start doing that, it's by investing in real estate, right? Um, so the primarily focus of most of our investors is to keep that money here. Of course, if there's some cash flow that they need, we can send it back.
Hmm.
But they created all these structures to keep the money in the in
Yeah.
the in the US for the long run. That's what we're selling them. Like, hey, see that money and in the US and forget about the exchange rate. It's
Mm.
now dollars
Hmm.
money. And whenever we sell a deal, you can reinvest it in the new one, and it will be
Okay.
like a snowball type of effect.
Gotcha, gotcha. So do you tend to lean towards deals that maybe have a little bit of a longer life cycle, or does that vary, or
We have deals, the shortest ones, I would say 2 years, five,
okay.
and up to five, seven.
Mm-hmm.
That's where we're focusing on right now.
Yeah.
Anything longer than that, it depends on the investor profile. There are some guys that they just want cash flow. They don't want like these development deals that we will sell lots, etc. But it's it all depends on what the investor wants, and we need to be very cognizant of their risk profile and how or which deals we need to present to them.
Mm-hmm. Interesting. So how's Miami been treating you? It's I've been there a few times recently. Amazing place, and I think you said you were there for 13 years. That's
Yeah,
evolved a lot, right, over the
it's
last
a
13
completely
years.
different city. It's a
Yeah.
completely different city, and it also exploded during COVID. Like
Yeah.
housing prices here are out of control, out of
Yeah.
control. I think I don't want to say that there will be a correction, but I think it's needed, at least in Miami.
Mm,
It's too hot. It has become the least affordable city in the U.S., right?
mm,
So in terms of housing, because the salaries are not at the same level as a place in New York, but you still pay similar rents as in New York. So I mean, but I love living here. It's an amazing place. The weather, it's great. Being next to the ocean, it's
yeah,
amazing.
yeah,
Um, and I think there are a lot of opportunities to do here in South Florida, but honestly, with the risk-adjusted returns that we're seeing in other places, we prefer not to
yeah,
invest
yeah.
in Miami.
To your point, it seems I think there needs to be some kind of correction or something. To get in now, the basis is very high, especially compared to if you've been there for a long time. You can look back and say maybe I would have bought back then, but
Yeah,
today it's just it's tough. You've talked to me about the residential approach. It's one of those things that you hear different things with family offices on what they want. And I was just on a different interview and we were joking. It's like if you met one family office, that's it. You've just met one. They all kind of think differently, right? And has that been your experience as well? When it comes to family offices, do they tend to operate? Is there any consistency that you see with the way they think or anything like that? Or is it all kind of just personal to, for whatever reason, their experiences or, whatever it may be? It just, what's that experience been like? And then are they liking the residential side and all? Because you always hear these things where they want industrial, they want commercial assets, they don't want to invest in people and stuff like that. And I think that's crazy. And I
I
think
agree.
residential is a great place to be. Like you mentioned affordability a ton. I think that's one of those things that is such an important aspect. We're going to need housing, we're going to need affordable, options for middle class and that kind of stuff. So I'm curious to, what you tend to see in the family office space when it comes to that. And what that balance is to, do you have people asking you, well, do you have commercial assets as well? Or,
Yeah.
because it sounds like you've dabbled in it. But I'm just curious to what their typical attitude is towards it, and if there is a consensus, or you tend to, talk to everybody's kind of personal and has their own kind of theories and take on the market and all that kind of stuff.
I think, for example, we have a family office that they have probably like 70 assets here in the US, and they never sold anything.
Mm,
They're long term, like they're losing money on office buildings, for
mm,
example,
mm-hmm,
but they are not selling. Uh, they have invested in retail and industrial, but not in residential. So now they're starting to say, hey, maybe residential is a place that we need to invest. And I think it's I would say a matter of, at least from the Mexican side, the multifamily industry, unless you understand it, you think that it's crazy to manage 300 apartments
mm,
rather than an office building that you will
mm-hmm,
have 15 tenants or
yeah,
whatever. Uh, and when you started explaining, hey, this is how multifamily works. You have the same property manager that you will have for an office building. Uh, you 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 diversify risk because if one tenant leaves, it doesn't hurt you that much.
sure, yeah, you
And
can absorb it better.
exactly, and you have this flexibility of adjusting rents every year.
Mm,
Uh, and we focus on the middle sector, like it's recession resilient, affordable housing or workforce housing.
mm,
It's recession resilient, right?
mm-hmm,
Um, and we always try to invest in necessity based
mm,
assets.
yeah,
Um, and like to your point, I think residential is the first necessity. You
sure,
might avoid going to the supermarket if you have like a ranch and you can grow your own food,
yeah,
but you need a place to live. you
yeah,
know um and retail, I would say grocery anchor retail could be another necessity based
mm-hmm,
um asset class, industrial to serve all of that,
sure,
but office you can avoid it. But recently we started to look at office deals with a contrarian type of view,
sure, Yeah.
because you can buy an office building for $100 per square foot.
Yeah.
Um, but that will depend on the location, who the tenants might be, the city, etc. Right?
Mm-hmm.
But I would say there are some investors that they have only invested in office, retail, and industrial because
Yeah.
that's what big families do, you
Sure.
know.
Yeah.
Um, but once they started understanding, multifamily, oh man, this is different, it's
Yeah.
and you should put them in the same category as the other as industrial, as in retail, as in office,
Mm-hmm.
uh, and to create a diversified portfolio. Um, to me, it's what I like to do. Honestly, I enjoy much more residential than the other ones.
Mm-hmm.
Not to say that the other ones are not good or not. It's just a matter of, it's preference.
Mm-hmm.
Um, but who knows what's going to happen in the next 4 or 5 years for multifamily? And like I told you, I want to
Mm.
have the flexibility to go into retail or office or
Sure.
industrial. We're starting to look at self-storage. We're looking at manufactured home deals. We're looking at a retail strategy that we really like a lot with an up and coming group, for example,
Mm-hmm.
in order to provide different options to our investors. That,
Mm.
hey, maybe I already have 4 deals with you on the residential side. I want a little bit of exposure in retail, for example. You
Mm.
know,
Yeah.
so we
Yeah.
we need to be able to provide those solutions as well.
Yeah. That's awesome. Well, this has been a great conversation. Yeah, so many great insights and a different perspective, and some cool insight into how the Mexican investors are looking at the states, looking at different markets and things like that. Great insight from your perspective on different markets and all, and just really cool to hear some of those things that you liked about Northwest Arkansas that was driving growth there and all that kind of stuff. So, if people want to learn more about what you do, why you're doing it, how they can get involved with you, all that kind of stuff, how can people get in touch and reach out and learn more about you?
Sure. I mean, my LinkedIn, Eduardo Viesca, or our website, manglar-capital.com. I'm not very active on LinkedIn, like posting a bunch of things, but we post every now and then whenever we close a deal. Um, and yeah, I mean, I'm always open to meet new people, spending time understanding what they want, what they need. So yeah, I'm pretty easy to reach out.
Awesome. Well, Eduardo, thank you so much. This has been a great conversation. I appreciate you joining me today.
Thank you, Peter. Thank you for the invite.